Where are the billionaires investing in 2026? Well, my observation is that most of these billionaires who have good amount of exposure in listed equities are now migrating themselves from listed to unlisted. And there is a reason behind it. Now they are after witnessing that India has produced more than 50 unicorns in the last decade, their confidence level in these startups have gone up. And thanks to show like Shark Tank in India, which is also helping the startup culture to build. And these promoters or billionaires are now taking one step and getting involved into private equity culture. What do you mean by private equity culture? When I say private equity culture, in the sense that there are two ways of investing in private equities. One is that you take an exposure to private companies through private placement. For example, if our company, we are into wealth management, and let's say we want to grow and expand our business, so we can dilute some amount of equity and talk to investors and sell some amount of shares of the companies. Now that's called equity transaction. But there are some companies where they've really reached to a level of 100 crores and above in terms of their overall net profits and revenues to the tune of 125, 150 crores. Now this is the sweet spot where these businesses are bought by some of the private equity companies, and these private equity companies are always in search of these unique businesses. When I say unique, in the sense that either they are heavily technology driven organizations, or maybe some of them are AI manufacturers here, or maybe somebody doing semiconductor business. These are unique businesses, which has long moat. Or somebody is, say, making a solution for rackets, which goes to Mars. Or somebody who is into defense. Now these sectors where you require a lot of innovations, some startup companies are getting good amount of success there. And these private billionaires that I am referring to are coming and investing heavily in these businesses at an early stage of their growth curve in order to ride through the entire growth journey. And as a result of that, what we are seeing is that these investors are making good money and they are holding on good amount of shares of private equity. The other advantage is when you have a situation like, for example, the current situation of this oil crisis and the war between Iran and America, they are not finding it so difficult to ride through this journey because their equity valuations have not marked down to large extent. Whereas in equity market, suddenly we saw a correction of almost 17-18% in the last 1.5 2 months. But that is not the case out there. So one, they don't have too much of volatility. B, their businesses are growing, so they know that their valuations will go up eventually. And C, they don't have too much of markdown happening in those businesses because there is a lot of good amount of time correction than a price correction. And as a result of that, these billionaires are investing in private equity. The other thing they are also doing it is that as far as their fixed income money is concerned, they are not investing in fixed deposits anymore. And gone are those days when they used to buy government bonds. Now they are heavily investing money through private credit funds, and as a result of that, private credit fund has become more than 1 lakh crores in India. They've been investing there, and they are making interest. The yield is about 14 to 15%. To my mind, that's a reasonable amount of money. So these are the two ways that they are investing. So thank you so much for watching this video. My name is Vikas Agarwal and I am the founder of AltPort. AltPort is emerging as one of the largest platform for investing in India. Thank you.